Okay guys, I'm going to ask Scruff. It's quite an interesting question, but it actually answers its own question at the same time. Let me kind of show you something. So if we go to Traders Clinic, ask Scruff. It's Jetski. So a little salute to you. Here's one for you. See you on the right side of the market. And I admire the trading of the charts, etc. But when you're wrong, it's not very often. You're right. I have a hit rate at the moment of 88%. But within that 88%, it's also sacrificed trades. So my actual failure rate, where it's catastrophically wrong, is very low. And I'll explain that one in just a second. All right. And I think the last bad position you were doing, and I still managed to pull it together, that's because I do my homework before I go to market. Recently, I had a significant loss. I knew I was on the wrong side of the USD. Well, that's the first red flag. My analysis was wrong, second red flag. And I knew it was wrong, and I've accepted and made a mistake. Right, okay. That's the good part, but the next part is not. I tried to rescue the trade with madness. No. But the darn thing kept falling. And I cannot pull the trigger. And it was in the box of pain. Well, if it's in the box of pain, you should be pulling the trigger anyway. And the thing, and kept thinking, this can't fall forever. I kept on waiting for the turn, at least minimize the loss until then I doubled my intended stop. How do you deal with pulling the trigger? Okay. There's quite a bit to unpack with that. All right. Now, first of all, one of the reasons I have a very high hit rate is I don't trade half as much as what you lot do. Now, this is one of those questions that's quite difficult to answer in the sense that somebody won't like the answer. We had sort of the abusive characters in the Discord that thankfully have left now. They don't like being told they're gambling, which is exactly what they were doing. And then when they're told they're gambling, they kick off. And then when they were abusive to other members as well and told to fuck off, they got really snarky. But really what they were snarky about was themselves. They're not capable of trading. Now, that element somewhere is in here, which is why I'm saying it's a difficult thing. If you can't pull the trigger, even when you know you're wrong, you're not trading anymore. You're gambling. And if you're gambling, you're already set up for a fail. And if that's the case and you can't break that habit, then you have to accept that and think maybe trading isn't for me. Okay? So that's the hardest part. And I know it's a rough thing to say, but it's the truth. Because when it comes to trading, trading is about your discipline and your mindset. Now, I trade once or twice a day for a reason. I know the biggest killer of accounts is over trading. So therefore, I cut it down. And I look for a market. That's where the strength and everything comes from, because I look for the best of the bunch. I trade the same basket day in, day out, and I only trade one of them at a time. So that cuts all my losses down simply by not being in the market. Now, when I have chosen a product, I'll then wait till the ducks are in a row before I'll even consider going to market. And then when they are, I'll press the button. That's where madness takes over. Madness does not rescue a trade. If it's being used to rescue a trade, again, you're adding into a bad trade, which is wrong. Madness is there to complement a good trade and take advantage of the pullback, which we all have, because the markets will naturally oscillate. So the second you press the button, you're already spread offside, and it'll normally just pull back a little bit while it settles. Madness takes into account that and gets you a better position at a better price, but it allows you to manage the trade as well. Okay, thank you very much. Right, so that's the madness side. So madness is already gauged on a good trade. It's not there to save a bad trade. I hope that makes sense. Now, the part that I picked up on this was I knew I was wrong, but then it went into the box of pain. Now, for those of you who don't know, the box of pain is an area on the chart that you mark that if I'm wrong and it goes to there, no matter what, I get out. Period. It's there simply to protect the account. The problem that we have here is it says I doubled my intended stop. Well, that's a red flag as well, because that's something that I would never do. Once it goes to box of pain, that's it. You know, I'll either pull it myself or I'll have a hard stop and then the computer will do it for me. But everything is hinged on being right in the first place. Okay, and I pay a lot of attention to do my homework. You guys, you watch me. I can sit for 6-7 hours for 10 pips. And I know people jump up and down about this, going, oh, I should have been in and I could have done this and I could have done that. No, the desire to trade should never outweigh the reason. My reason is freedom, etc., etc., and I need 10 pips. I don't need to be in the market to get it. So, in essence, without going off on one, well,
you will.
No, I'm not. I'm going to make a conscious effort to calm down a little bit and not swear as much. Well, that's not going to happen, really, is
Should we
it?
get a swear box?
You can fuck that up. I mean, that's a good idea.
It's a pound already.
Right, so you map your trade out. You map it out with a sensible stop based roughly on whatever the ATR is. I will not exceed a full ATR. If I'm going into a swing trade, I might do an ATR and a half. But on a day trade, I'm normally about half an ATR. So to give you an idea, if you're trading cable, it might be 40 pips. You know, if it's on the DAX, I might push that out to 60, you know. But once the market goes beyond that, the chances of it coming back is pretty slim. All right, but the FTSE cable, euro dollar, they'll oscillate around 30-40 pips. So my stop will be in and around that, but it'll be based on a level and a swing. So that's the first part. Then it's broken up to capitalize on the movement of the market. So that's it. And it's all put into place based on the direction in the first place. Now, if I'm wrong and it goes beyond that 40 pips and it starts and it's in that box of pain, if I can't physically press that button, there'll be a hard stop in there that'll do it for me. So that stops the doubling of your stop. The cardinal sin is you never move your stop away from the price once it's in. You only pull it towards the price. And that's it. So the other part of it that I'll kind of touch on as well is this thing can't fall forever. I think you'll find that it can. Look at gold. Look at the indices over the last 18 months. Look at pound at the moment. Pound is plummeting. Euro is moving down heavily. Why? The economies are all over the place. And an indicator will only show you what the market has done, not what the market is going to do. So when you're doing multiple time analysis, you're just putting your ducks in the row and putting a high probability together. It's not a fraction of the future. It's only what has happened, and you're seeing if the train is going to continue. And that's it. So put your stop in and stick to it, period. If you think for a merry second that you're wrong, then this is why I do an analysis every hour. And unless there's a major change in direction, I'll stick with it. But if there's a major change in direction, then I'm wrong. I'll just pull the plug. And I'd rather have a slap in the face and a kick in the bollocks. And that's kind of the way I look at it. So the next time you're in the market, if you're wrong and you know you're wrong, just accept it and get out. And that's the difference between trading and gambling. The gambler will hang on with a wing and a prayer. And we had an incident where the guy says, I've got too much on the table to lose. Well, it was over leveraged in the first place. So again, it's back to gambling. And I know I've mentioned it a few times, and I know a lot of people don't like that because they think trading is singing and dancing and you're going to hit every single one of them. You are if you trade less. But if you're in the market searching for trades and hanging on a wing and a prayer, you're gambling, and you need to get that out of your system. And once it's out of the system, you'll find this job becomes really easy. I never gamble on anything. I only go in when I'm pretty much certain the direction is right. I'm not worried about the entry, the direction. If I get the direction right, it'll forgive a bad entry, and madness will capitalize on that. So I hope that helps, and as always, keep the questions coming and I'll try and answer them best I can. These are great questions for sort of when we're in Zoom. So this week when we do the Q&A, drop in and we'll have a talk about it, and we can pull it on a chart, and I can show you areas of the chart, where to place your stop, that sort of thing. I'll be doing it tonight because obviously I'll be doing my own breakdown and my predictions for the week, etc. So catch you soon. So as always, guys, trade well, keep your risk managed, but above all, do what you love and the money will follow. See you all in the next one.